Hey guys, it is May 14th, 2025. We're looking at New York session. Today I am bearish, okay? I'm looking for sells. All right. And again, bias could be completely wrong. But I'm just going to wait and be patient and just see if I get like some type of confirmation that price will go down. And as you can see, if you are a bull right now, you're definitely on the good side of the market. This was a great move to the upside. But again, I'm still sticking to my bias, just need a confirmation. So I'm waiting patiently, and it can, be a lot for traders to, go through this because they have to sit and wait. And sometimes you just have to sit on your hands, even if it continues going up. Or your bias was wrong. You just have to accept that you were wrong and trade again another day. But as you can see, this thing is super bullish. But I don't have a confirmation that we're really, really going to be set bullish for this open, just because I don't see a higher frame close that I'm looking for. So again, I'm still bearish, even though the market is clearly going up. And as you can see, if you were on the buy side at market open, you definitely gained some pips today. All right. So let's just see if we get a rejection. And if we, as you can see right now, we are getting a rejection, and all I need is the confirmation, and then I'm all in. Okay, after the rejection. So let's see if this is an actual rejection on the higher time frame, or is this a pullback to continue going up. So the only thing that can tell that is our patience and just waiting to see what the market does. Okay, just waiting for confirmation. We're not rushing, we're not panicking, we're trading with ease. It's all right, it's okay. Not catching FOMO. And again, if I'm wrong, it's okay. We will live to trade another day. So let's see what this thing does. Patience, patience, patience is everything, I swear. It's part of the game. It's part of the game. It is everything. Seriously, it's everything in this game is patience. Discipline, sticking to your rules, not catching FOMO. All right, so we are rejecting, okay, which is good, but we're not, it's just not confirmed yet. All right, it's just not confirmed yet. So we just got to wait and see how this thing plays out. All right, so we are starting to tumble down a little bit. Okay. Let's see if we can really get what we really want out of this. Let's see if our patience pays. Let's see if it pays. Let's get the confirmation. The bias is still bearish, even though we had a beautiful move up. We still are bearish. Okay. So let's see what the bears have today. Let's see if we can get a confirmation. Let the market do its thing. You got to let the market do its thing. Okay, here we go. All right, so I'm just waiting to see if this candle gives me a nice close below my key level. This all in all will be all that I need. And here we go. We're in. We're in. We're in. We're in. We're in. All right, this thing is starting to melt down. Beautiful, beautiful, beautiful. All right, so I just wanted to just point this out with liquid charts today. And this is something I didn't consider before. I'm going for 60 points, by the way. But I didn't consider this before. While taking this trade, I swore that like price like kissed my take profit like once or twice, and it really made me mad because after it did it, it pulled back and I was still in the trade. Okay, you'll definitely see that play out in this trade right here. But what I want to say is that you always have to consider spread. Okay, always consider spread. What your take profit may be on TradingView, because I mark up on TradingView. I just have to be aware to put my pips a little bit, farther up than, than the original price. Maybe like 2 or 3, maybe 5, to be on the safe side. Okay. So we're coming down, and as you can see, that green line is my take profit. Okay. It's 21,198.40, and that was the same amount that I had on my trading view. Okay. But now it's like, okay, I was really like upset this morning about this, like, and I just realized that I have to consider the spread. So instead of going for the 21,198 dot 40, I went for 21,198.00. Okay. Just to bring it closer. But as you can see at this point, I'm like panicking because it came down, it like kissed my stop loss, and then it reversed. So I brought my not my stop loss, my take profit, and then it went reverse. But I brought my stop loss down to break even, panicking at this point, and I changed my take profit to that 21, I think it was 21,198.0. Okay. And at this point, I'm still on this trade. I'm hoping it goes down. I'm hoping it goes down because I really did want this thing to work out, and it kind of sucks that I thought it was where I wanted it to be, and it didn't. It didn't work out. But as you can see, worst come to worst, I'll just break even on this trade. But if it goes back down to my take profit, that would be lovely. I guess the biggest suggestion for this would be to manually like watch your trades and take yourself out as you see the market doesn't take you out, or even set some target alerts, not target alerts, but price alerts. When it gets closer to your take profit, you get alert, so to be watching your phone or your screens, to get out of that trade. Okay, because the spread changes within a moment. It doesn't really matter what day it is. It can be news, it can be volume that can switch up the spread. So you really got to keep your eye on it. Okay. But thank God, like I'm a patient, I'm just patient. And I really felt like the market was going to go down, but at least go down 60 points today. So I held this trade hoping that it's going to touch my actual stop loss. I mean, my actual take profit. So, let's hope for that, And as you can see, it pulled back down. And just trying to hold on. This is so nerve-wracking. So that's why always consider the spread, because there's going to be times where it kisses your take profit, and then it just goes the opposite direction, and you better hope you at least put your stop loss to break even, or just get out the trade, and secure some type of profit. But this is just part of the game, so let's see how this plays out. Let's go. Come on, come on, come on. 60 points today, Nas. 60 points. And we got it. We got it. And we're out of the trade. Consider, myself lucky today. Thank you, thank you, thank you for working out today, Nas. Again, we gained 60 points. And again, I know my account size isn't attractive. I also trade futures, but prop firms, Apex currently. So while I'm trading this, I'm also trading my futures account too. But this is a small account. It's not attractive. Okay, it's not what people want to see. But the reason why I wanted to start with a small account, to show others, and why I'm showing it to others, because I feel like it's so tangible, and it's something that anyone could do and start with. What I mean? Start with $100. You can trade the NASDAQ. Okay. And I'm using liquid charts. And like I said, with this, with any Forex broker, you're going to experience spreads, and you have to be aware of that. You know what I mean? It's something that I dealt with when I traded Forex back in the day, but it's something that's still present in the Forex experience when you're trading. Okay. So with that said, just be aware of that, and don't think of it as the money amount. Just think of it more so as the percentage and how many pips you're gaining per day, per week. And this $100 can turn into $500. That $500 can turn into thousands and thousands of dollars that you can generate and grow. And after that, instead of making what I think I made $12 today, just imagine compounding and being consistent. That $12 can turn into $20, $40 a day, $60 a day, $100 a day, several $100s a day, thousands of dollars a day. Okay. So don't get thrown off by the small dollar amount, because in this game, to be in this game long term, the only thing that matters is your discipline, your patience, and being consistent. Okay. So that's all I have for you all today. And thank you for joining me. All right. I'll talk to you soon.